Have you ever wondered what you would do if you suddenly found yourself in the midst of a financial crisis? A financial crisis, an event where the value of financial institutions or assets drops significantly, is a storm that can drastically alter your lifestyle if you're not prepared. It's like an unseen tidal wave, ready to sweep away the unprepared. It's essential to understand the potential impacts, the change it can bring to our day-to-day lives. But fear not, for with the right knowledge and preparation, surviving a financial crisis is more than possible. The first step to surviving a financial crisis is recognizing the signs. Let's delve into those signs, shall we? They often reveal themselves in the form of job loss, market instability, and increased living costs. Job loss can be a clear indicator of a looming crisis. When companies start downsizing, it often signals a tightening economy. Market instability, on the other hand, is a bit trickier to identify. It involves fluctuations in stock prices and can be a sign of investor unease, hinting at a potential crisis. Then we have increased living costs. When the price of essentials, such as food, utilities, and housing, begin to climb, it could be an indicator of inflation, another sign of an impending financial crisis. Recognizing these signs early can provide a significant advantage. It allows for better preparation, helping you brace for the impact. With the ability to recognize these signs, you are one step closer to weathering any financial storm. Next on the list is building an emergency fund. Now envision this. A financial storm hits and you're left scrambling, unsure of how to protect what you've worked so hard for. This is where an emergency fund steps in, acting as an economic umbrella that shields you from the downpour. Having an emergency fund to cover basic living expenses is paramount. This isn't about indulging in luxury purchases or funding your next holiday. This is about ensuring you can keep a roof over your head, put food on your table, and maintain other essential needs when times get tough. Think of it as your personal financial safety net, providing peace of mind during uncertain times. It's about knowing that even in the face of a crisis, you have a buffer that can keep you afloat. So start now. Build that fund bit by bit, because when the financial storm hits, you'll be glad you did. Remember, an emergency fund is not a luxury, but a necessity during a financial crisis. Diversifying your income is another crucial step in surviving a financial crisis. You see, income diversification is a bit like planting different kinds of seeds in your financial garden. Each seed represents a different income stream, and the more diversified, the better your chances of weathering a storm. Imagine you're a farmer with only one crop. If a disease hits that crop, your entire income could be wiped out. But if you've planted multiple crops, the disease might hit one, but the others can still thrive. The same principle applies to your income. If you're solely dependent on one job or business and it falls through, you could be left without any income at all. However, having a variety of income streams, such as a side business, investments, or freelance work, can provide a financial safety net. In the face of a financial crisis, income diversification can provide stability, giving you the flexibility to adapt and evolve. Having multiple streams of income ensures that if one stream dries up, others can keep you afloat. In summary, surviving a financial crisis is all about preparation. Today, we've journeyed through the unseen reality of financial crises and how they often catch us off guard. We've learned to recognize the signs of an impending storm, the subtle shifts in the economic climate that can hint at trouble brewing beneath the surface. We've also explored the importance of building an emergency fund. This financial safety net can be the lifeline that keeps us afloat when the waves of crisis come crashing. It's not about hoarding every penny, but rather about setting aside a portion of our income consistently and intentionally for the unexpected. Furthermore, we have delved into the concept of diversifying our income. In the face of a financial crisis, having multiple income streams can be the difference between sinking and swimming. It's about exploring opportunities that can supplement our primary income and not putting all our financial eggs in one basket. These strategies may seem daunting or even unnecessary when the skies are clear, but remember, it's not about predicting the storm, it's about preparing for it. In the grand scheme of things, these steps are small, yet they can make a world of difference when the financial tide turns. Remember, it's not about predicting a crisis, but preparing for one. With these steps, you can navigate any financial storm with confidence and resilience.